Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from mpiinvest.com. Coming to the market yesterday, as expected, the markets continued to be volatile. And if you see yesterday, it was like, the market went all the way. The morning it was showing a lot of strength and was looking as if the market is going to break 17,800. But of course, 17,800 was a major resistance. So that is something that we could see yesterday. The strength was being lost, and we could see a huge sell-off by end of the day, especially the last half an hour, I would say. So right now, I would say 17,800 to 17,850 is a very important zone to be watched because any strong closing above this range can actually make the stock market more bullish in Indian market. But if you look at yesterday, the major power actually came in from the IT sector, which was kind of trying to recover. And, we could see ICICI Bank also doing really well. PSU banks also have been doing well, but the weakness actually came in from HDFC Twins. So, what is the reason for HDFC Twins to be this weak? I don't see any reason. Of course, there are some news that they are taking over a few companies. That's something I don't know. It looks positive, but why HDFC has to be weak? Could be more of the FIA selling because of late FIAs have been selling on a daily basis. Yesterday also they have sold close to 500 crores. But of course, one important thing to note is that FIAs are not selling big, and DAEs are trying to match it, though not 100%. So overall, I would say the markets are still kind of okay. But right now, it was a tight consolidation yesterday, and our range, which we had spoken about in the start of the week, that I'm expecting the market to expire between 17,500 and 18,000 stays intact. In fact, now I feel the way things are going, probably on the market on the lower side looks lower chance of going down. So 17,600 to 18,000 could be the range for expiry tomorrow. So that is what I am expecting. And if you remember, in the start of the week itself, I think on Market Pulse or the next day, I had spoken about this. I had told you that I am expecting the market to consolidate with a positive bias, and that's exactly what happened this week. So market as of now has been consolidating with the positive bias right now. So what happened after Indian markets closed is something important to know. So okay, by the way, I forgot to tell about yesterday's results. So yesterday, Nestle had declared the results during the market hours, and it was a good result, I would say. Dividends also were announced, but some stockbrokers have actually gone negative on Nestle because though the results are good, they say that their strong points have not seen great growth. So that means over a period of time it might see some consolidation. So that was there about it. And next there was AU Bank and Bank of Maharashtra, which came up with results. Both of them are really good. So bank stocks have been actually performing well in terms of results. Still, one important thing that we need to note is SBI results are still awaited. It is probably SBI that could actually bring some positivity. In fact, if you see, of late after HDFC Bank and ICICI Bank and all came with good results, SBI has been on a continuous rise. So that could see some short, covering. Long, the long covering. So it could see some long covering because the market, SBI has been on continuous rise. Whenever the result comes, we might see some selling happening in SBI. But of course, for a longer term investor, you don't have to worry about all this. This is just part of the game. If you're invested, I would say just stay invested in SBI, and it looks good. So, again, I'm not a SEBI registered analyst, so do take your do make your due diligence before investing. So apart from that, if you look at the market, the banks are doing well, and IT sector is trying to recover. So these are two sectors which needs to take some support. HDFC Twins will be watched because it could be because of the FI selling. So until that HDFC Twins start recovering, 18,000 is of course going to be a distant dream for now. But one more thing that is quite interesting is if you look at Reliance came up with decent results, and still it has not actually made any big moves. So it is still consolidating in the similar range. So that is one sector which I am watching because at any point of time we could see a big move from Reliance. It could be either downwards or upwards, with high chances of being upwards. If that happens, that is when probably Nifty can actually go break 18,000. So that is what is the expectation right now. So after Indian markets closed, there were two important things in the US. One was the consumer confidence data was out, and also second one was the major results in the US. That was the Google, that is Alphabet, which is parent company of Google, and Microsoft. So these two results, as per market expectation, they were supposed to be bad, and that's exactly why we could see a sell-off in the US market. By end of the day, Nasdaq was down by 2% yesterday. Dow Jones also fell by 300 points. Okay, there was one more news. First Republic Bank announced their results, and that showed that their deposits have gone down by more than 50%, which was much higher than the market expectation, and because of which yesterday itself in one day, First Republic Bank has again fallen by 50%. So that led to 300 points down in Dow also. So overall, it was a negative day in the US. But something interesting happened after the markets closed in the US. That is, after the market, as Google and Microsoft came up with the results, and the best thing was both of them have beat market expectations. And when they beat market expectations, naturally the markets have to react. So yesterday, post-market hours, after the markets closed in the US, the post-trade has actually seen Google and Microsoft rise. In fact, what has happened is when the US market closed negative, SGX Nifty had also gone negative. But then after the post-market, the trading data came where Google and Microsoft rallied up. In fact, I would say after their results, SGX Nifty also has rallied up. So if you look at as of now, it is showing almost a gap up opening in SGX Nifty. That means India could again see a gap up opening today. But then, like I told you, I am just expecting the market to be consolidating, and I'm not expecting a rally from here unless some major buying comes in from FIS. So that is the expectation for now. So I'm kind of expecting the market to expire between 17,600 and 17,900 for tomorrow. But in between, of course, the volatility is going to be really high because tomorrow is the monthly expiry. So monthly expiry, you always know, is very volatile. So that would exactly keep today's day also really volatile. So overall, the market can be really volatile. In fact, Infosys also fell yesterday, so that I took that opportunity to add some more Infosys in my portfolio. So I told you I've been investing in SIP mode into Infosys, and that is something that's being continued. And I am expecting it to kind of recover soon. So in fact, if you look at today, Infosys looks to be the most bearish IT stock in India as of now. But I think that's a temporary phase, so it should be out of this phase soon. So with that, I think today we need to be focusing on the pre-expiry day trades. Let's see how the market moves. Of course, a lot of volatility expected. There could be crazy moves today and tomorrow. Be prepared if you want to trade. Otherwise, if you want to be a safer person, just avoid trading and being in the market for next 2 days. But of course, every intraday sell-off can be used as an opportunity to buy some good stocks. Because SIP mode of investing, this is the right time to do it because that could give us great returns in the upcoming months. So we have a few days left for Karnataka elections. So because of that, we will be seeing some volatility also even after tomorrow's expiry. So these are a few things that could affect the market as of now. Let's see how the market goes. I am sure things will start getting positive in the upcoming months as we go. So that's it for now. This is Srikanth. I'm signing off. But before we leave, do remember to press the like button if you love the content that we share, and do share this podcast with your friends and relatives to help them learn and invest together with us. And if you have still not subscribed to our channel, do remember to subscribe because that is when you get the latest notification about the content that we post here. We have a lot of interesting content coming in the few days on this channel. So that's it for now. Have a great day. Wishing you a great day ahead. This is Srikanth signing off. Goodbye.